By the way, it's interesting. I look at some of the stocks that are flying, um, and I'm seeing. I didn't quite piece it together, but a common denominator is they are have high dividend yields. So you basically just got ahead of the debt ceiling. You had peak yields in the treasuries, certainly 0 to 2 year, and so there was no reason to be in dividend stocks. So people were selling that because they get the same 5% yield they were getting in these dividend yielders in U.S. treasuries. But now that the debt ceiling's done, and now we're going to get the skip or pause next week, provided the inflation numbers come in as we expect, yields are going to compress, and the demand for those stocks with high dividends is going to go up, and that's where you're going to see the 3Ms, the VFCs, the VNOs. Even though VNO has deferred their dividend payment till the end of the year, they still have to pay it before the end of the year. All these big dividend stocks that have been taken out to the woodshed. It's not Stanley Black and Decker. It's not because their businesses are that impaired. It's because of the supply and demand for the yield, and they couldn't compete. Just like the banks couldn't compete on deposit rates with the U.S. Treasury, neither could these companies that people were in for the dividends, REITs. Okay, now they're going to become more in favor once the Treasury stops competing with these dividend growers. So I think that's a very, very key change.